Hello and welcome to Business Incorporated live on Channels Television. It's another trading day right here in Lagos, Nigeria, but the trading week is winding down. Coming up in the next 55 minutes. As Nigeria's first domestic dollar bond records 180% subscription, we get an outlook for Nigeria's debt stock. The Tanzanian government urges local and foreign investors to participate as the government opens business for the blue economy. Ethiopian Airlines expands Africa route with a new port and Sudan service. All right, let's get a check on the markets now, starting with metals. Now, see the bullion that rose today. Expectations of a U.S. Federal Reserve rate cut next week. That's pushing sentiment right there. $2,515 per ounce. That's for spot gold, up 0.2%. We'll see the U.S. gold futures. That's unchanged at $2,543. So definitely a lot of issues there to look at for investors. Geopolitics, consumer price that came out yesterday for August, showing the central bank in the U.S. close to their target and still staying there, but core inflation was the only sticky spot there in that report. Let's get a check on the oil market now. See, oil prices rose almost 2% today, extending a rebound that was spurred with concerns over Hurricane Francine's impacts on the U.S. output. $71.01 a barrel, 0.6%, over 0.5% up for Brent crude. And we see WTI, that's a U.S. grade, $67. See the range between both, closing up a bit, 0.5% up. So still fears that there might be short-term loss for that $70 range guest I spoke to yesterday, but we'll see how it plays out going forward, either demand or supply issues. But both contracts rose more than 2% in the previous session as offshore platforms in the U.S. Gulf of Mexico were shot, and refinery operations on the coast were disrupted by Hurricane Francine's landfall in southern Louisiana. That was yesterday. Let's get a check. Meanwhile, the International Energy Agency has cut its 2024 oil demand growth forecast by 70,000 barrels per day. It's about 7.2% to 900,000 barrels per day. The Paris-based agency cited slowdown in Chinese demand as the main driver of weaker global demand growth. It now expects Chinese demand to grow by only 180,000 barrels per day in 2024, as a broader macroeconomic slowdown coincides with higher uptake of electric vehicles, that's EVs, playing into that market. To other stories now, working to achieve consistent food supply in Nigeria, the federal government has commenced distribution of farm inputs in the southwestern part of the country. A member for various crops of animal production associations have received fertilizers. A couple of members have received in Lagos State. Do take a listen.
Farmers involved in different crop and animal production are here at the instance of the flag off of the distribution of fertilizers to Southwest farmers by the federal government. It's a good place to share challenges experienced in the process of ensuring food supply in the country.
If the government can help us, maybe assessing all those land, like we said, Afan has 57 SCDA in Lagos State. If Lagos State can have like 1,000 hectares of land and say, okay, like all our LGA, we give them 10 hectares as a cluster farming, and the government can come in to help us in the clearing of land, because that has been the major challenge. When you try to assess those land individually, clearing land has always been a challenge. And government come in this area to help us.
Mr. Rafiu,
ideas shared generate possible solutions that can be implemented by the same farmers.
I am also a poultry farmer, and I can tell you how price of feed increases from 18,000 to 28,000 almost every week. The only way we can solve it, man, there's no magical. It's when you improve or you increase production of what? Maize and soya.
The purpose of the meeting is next. Fertilizers are distributed to screened farmers. The representative of the Special Advisor to the President on Agriculture says there are plans for even more incentives.
So this is the beginning. So the President is going to bring in so many interventions into the Southwest. So the President is going to support the husbandry sector, is going to support the fisheries. So there are so many interventions on the way. So we use this medium to thank the President. So the President did bring us in from the private sectors so that we can actually make sure this fertilizer gets to the hands of the main farmers.
The threat of food insecurity is real in Nigeria, and seemingly little efforts and ideas carried out here hold the potential to contribute to supply.
And to other stories, the Federal Ministry of Arts, Culture and Creative Economy is mapping out hubs that support talents in order to collaborate with them and create more jobs in the country. The Minister of Arts, Culture and Creative Economy, Hannatu Musawa, made this known at an event in Lagos with an appeal to the private sector to collaborate with it in order to realize the many ideas, initiatives and projects the ministry has in the pipeline.
The artistic community, media, public and private sector, all under one roof for a meeting put together by the Federal Ministry of Arts, Culture and the Creative Economy in Lagos to interface and explore opportunities that will not just move the industry forward, but create more jobs.
Nigeria is having a moment. The whole world is interested in Nigeria, not for our oil, talent, in our content and in our culture, in our films, in our music, in our fashion. So we want to leverage on that. We want to ensure that we bring traction into Nigeria through our cultural and creative industry.
These stakeholders in the creative sector and its support systems are here to serve as partners in progress to improve the sector through smart strategic collaboration and investment. The Minister of Arts, Culture and the Creative Economy, Hannatu Musawa, gives the gathering more information on this.
It's important for them to have a look at the pillars to see which one that aligns with their own brand. But I really want to walk away here with 1 or 2 or 100 partnerships.
For the entities already making their contributions to the visual arts, theatre, music, film and the ingenuity in the country, it's a good move.
This was a well thought out vision. It was explained well, very well articulated in terms of the journey we need to go on. She painted a picture, a very rich tapestry of our culture, the assets we're sitting on and the opportunities in that space. It's extremely broad, as you know.
Tourism alone is bringing 4 million people to South Korea in between 6 months, just to one museum. So Nigeria have everything.
So you look at countries like France, Botswana, to name a few of them, Angola, Rwanda, they've all thrived on tourism, culture and arts. These are sectors that have contributed largely to their economy independently. So for the Ministry of Arts, Culture and Creative Economy to have put this platform together, convening multi-stakeholders from various sectors to discuss the way forward for investment, unveiling their plan is something that has never been done, at least not in the last 10 years.
A lot of ideas are on the table. Execution is at the heart of the matter, and the ministry has been applauded for getting this conversation started so no creative subsector is left behind in the drive to create more jobs.
All right, now to our first conversation. We see Nigeria has reached a significant milestone with the successful launch of its first domestic dollar-denominated bond, drawing over $900 million in subscriptions. This $500 million bond, orchestrated by the Africa Finance Corporation, represents a crucial advancement in Nigeria's economic growth and underscores the increasing confidence in its capital market. Now to discuss Nigeria's debt stock and expectations after the August U.S. CPI data. That's for the U.S. We have joining us Ugo Dre Obichukwu, who's the founder of Nairametrics, joining me via Zoom. Great to have you on the show.
Hey, same here, Ladi. How are you doing?
I'm fine. So much excitement about this raise, oversubscribed by 180%. How are you seeing it? Any risk to be worried about?
Well, I mean, it's a sovereign debt, so risk is not as elevated as you would have thought if it wasn't. If it was maybe a corporate bond, Nigeria, I think, is in a good place when it comes to its public debt. Bear in mind we do have about 43 or so billion dollars in foreign debt at the moment. A lot of our rates are relatively okay. Even the spacing of when repayment for some of these debts are meant to happen is fairly well spaced, so not a lot of risk there. Not also surprised
Ugodre is frozen there, but he was making a sense about the risk.
Can you hear me?
All right, I can hear you now. Yeah, you can carry on.
Okay,
I lost you for a moment, but you're back.
All right. So I said I'm not surprised that it was highly oversubscribed. A lot of Nigerians do have a lot of FX deposits in their bank accounts. Obviously for obvious reasons, people don't want to be that exposed to a weakening naira, and so a lot of that money are just stashed in banks doing nothing. And so with a yield of 9.75% or coupon of 9.75%, I think was a good deal. So no surprises there, laddie. No surprise there.
All right.
And of course, I don't see any imminent risk.
All right, I guess good deal, according to you. But we still keep talking about Nigeria's debt stock. How much will this impact our current state when it comes to debt stock?
Yeah, so like I mentioned, I think in terms of total external debt stock, I think we have about 43 or so $billion external debt stock. That's as at March 2024. Could be slightly higher by the time the DMO releases its latest numbers. And so not a lot of impact. It's just $900 million, assuming that they accept the entire subscription. So not that much. And so I don't also see a lot of, that's why I said I don't see a lot of risk in here at all. It seems relatively okay that we're having this sort of, we're seeing Nigerians at least subscribing both locally and in diaspora. So nothing to worry about for now. Now, where I do get worried though is our ability to meet some of these obligations, say 3, 4, 5 years from now. And of course, that depends on how well we're able to manage a lot of our resource issues, be it our ability to export out of the country. I think that's where I'll be a little worried.
Right. And I was speaking with my guest yesterday, and we did talk about how much the Naira has been devalued in the past, say, 5 years. And I would say it lost about 500% value in that space. And definitely, I'm wondering if there's a relationship between, rising debts and the strength of your currency.
Rather, there would always be a relationship, but I think the relationship to me is when you have large physical deficits, as we're currently running. You do know we have large physical deficit, despite the fact that we're seeing government revenue increase of late, but we're still running a very large physical deficit economy. And so long as you continue to run a large physical deficit economy, then there's always risk that your currency can be devalued or will continue to be under pressure. And of course, the fact that we're even borrowing also suggests also buttresses why we're running large fiscal deficit. If we're running a large fiscal deficit, we won't be borrowing anyway. So you borrow just to plug those deficit. Now, the flip side is that because you're borrowing in dollars, I think the conventional impression people have is that sort of feeds into the central bank's ability to defend the Naira. Or at least provide liquidity in the FX market, which is possible, but that doesn't take away the fact that you're running large deficit. And of course, bond buyers know this, and so what can start to happen is that as they see your physical, side and check whether you're actually fiscally responsible, how you're able to generate enough revenues to pay, government expenditure, then that determines the kind of rates that they can give you going forward. And so that potentially is where I would, probably turn my searchlight on. But in terms of the currency weakness, I think that you will continue to see a lot of the pressure that we've been seeing of late. That's because as a country, we're still not generating enough export revenue. A lot of the mixes, a lot of the forex that we're seeing at the moment is largely foreign portfolio induced. And so nothing that organic yet. And of course, we're still very much exposed to what's happening in the foreign markets. You're seeing what's happening with oil prices. crude oil prices under pressure. So everybody has one eye on that. And when you have crude oil prices falling the way it is, then that obviously puts the exchange rate stability at risk. So Ladi, by and large, I do think that yes, as much as it's a good thing that we're seeing FX coming through issuance of foreign debt or foreign bonds, as the case may be, we still have that issue of fiscal deficit, and to me, that is probably the biggest problem we have facing our FX, our ability to stabilize our forex markets.
Right, and you did mention imports there and trade, and looking at our recent trade data, we're seeing exports exceeding imports this time. I know we've all been clamoring for us to improve our exports and get imports lower. So we're seeing that happen now, but is this the one to be excited about?
Yeah, it is. I mean, you always want to have a trade surplus when you're looking at your trade data. And I think we've seen 2 consecutive quarters of improved trade surplus, albeit pretty easy to understand why. We're seeing a lot more, crude oil exports value-wise, not that in terms of actual crude numbers it's increasing, but in terms of value of the crude oil exports that we're getting, the numbers are of course increasing, factor in exchange rate, and you can understand why. But Ladi, on the other side, you're also still seeing an increase in things like petroleum imports, increase in the value of petroleum imports. From what we saw, we've seen the highest ever second quarter for petroleum imports in Nigeria in terms of import bill. So that is also pressure. And of course, if you also look at the mix of exports that we're doing, still heavily reliant on crude oil exports. So whilst it's good that we're seeing trade surplus, very good, don't get me wrong, but that doesn't tell the entire story. Most of the exports you're seeing are crude related, and of course you also have a lot of people not also still being able to import because of the cost of importation, factor in FX, factor in purchasing power of Nigerians. And of course, if you go to supermarkets today or even go to regular shops out there, Ladi, you're pretty sure a lot of the things you tend to see a lot, in aisles, you don't see them anymore in supermarket aisles because people really can't afford to import that much. And so that would obviously feed into the trade data that you're seeing. But I mean, economists will tell you that's the whole idea around trying to, implement an FX regime that is not subsidized whatsoever. Let the market decide how, what sort of products Nigerians want to buy, whether it be imported products or local products. And then so that you don't start to subsidize aspects of the economy that don't need being subsidized. So
right.
To me, yes, the numbers were good trade surplus. We should expect more of that, but you want to see a lot more. You want to see that export mix go beyond relying just on crude. You want to see more products being exported out of Nigeria.
Right, I guess currency devaluation will humble your taste for, imported goods with what we're seeing from that data. Well, thank you so much. It was great having you, Godre Obichukwu, founder Nairametrics. Thank you.
A pleasure. Yeah.
All right, we'll take a break now. We'll come back, head straight to the markets. That's in a moment. Just stay with us. right, let's head straight to the markets now. We have Anete Edet with the details, and definitely going to give us details for what's happening at the local bourse at intraday and major markets we track internationally. Great to have you, Anete. So we've all been talking CPI. What's happening to the consumer with prices rising, but now all eyes on the producers. Producer inflation in most of these countries.
Yes, good afternoon, Ladi. Producers, and especially, the number one economy, that's US. Yesterday was the CPI, but this time it's producers' price, and not just from the world's largest economy, also in one of the world's one of the world's biggest economy, that's Japan, as well as India. Japan has already released its own producer price index.
For all the big boys at this point.
Exactly, the big boys. And I think two other countries are also releasing that. But the all-important one, which is from the United States, which comes about we're still counting down to that all-important Federal Reserve's meeting for next week. So it is also like a pointer to what will the Fed do? Is it going to be 0.25%? Well, some people say it's kind of a mixed feeling or mixed expectation, because if the Fed should cut, by what percentage point? Some says it could be detrimental to the market, while some say it could be profitable to the market. Well, but guess it's...
yeah, definitely a lot to ponder there, because everyone wants to know how big the US Fed can actually go with this rate cuts. But at the end of the day, so much data for them to take a look at, but it was expected the road to rate cuts will not be straight. But we'll see. We'll definitely see.
It's a bumpy road.
Very bumpy.
But we'll get there. Bumpy, slow and steady wins the race. Okay, so Africa is where we always start off for the markets at intraday numbers before all the markets close, although in some parts of Asia, or most parts of Asia, they already closed 8 hours, 7 hours ahead of local time here. But let's take a look at intraday market numbers starting off with Nigeria, 0.06%. And although this number has gone into the green, it's making a seesaw back and forth, up and down movement for intraday, 96,773.19. That was the last number that we tracked. Month to date, the all-share index is about, at a plus 29.3%. Year to date, month to date is just a slight movement there in the green, 0.1%. Now, for the Johannesburg Stock Exchange, 1.14% at intraday, and for the Egyptian Stock Exchange, we see kind of some gains there also, 0.52%, while for the Nairobi Stock Exchange on Kenya, for Wednesday's close, 0.38%. And of course, it has climbed to a new level, 107.07 for the close of midweek trade session. And of course, that market will be open today, much later on the trading for Thursday. Okay, now we're still with Nigeria's financial markets. And this time we're going to be having like a mixture of both the equities market as well as the fixed income market. But we're starting first with the primary market auction yesterday, where we saw the central bank on behalf of the domestic the debt management office had offered a total of 161.88 billion naira worth of NTB primary market auction instruments there. And of course, we also saw that result. This is what you see, the result there for the close of the NTB primary market auction, the second one for the month September. Last week, yes, the CBN did carry out one primary market auction, but this is for the result yesterday. I will see the auction date, 11th of September 2024. Across here, you see the stop rate, as well as the allotment, the subscription, the tenor across the 91-day, the 182-day, as well as the 364-day instrument. So that's it for the market numbers. Okay, so now let's get a closer perspective of the result and a better understanding of what this means for Nigeria's fixed income market, the debt market. And we bring in Nabila Mohammed, a financial market analyst with Chapel Hill Denham. Thank you for joining us, Nabila.
For having me. Good afternoon, Anita.
Okay, so now for the better understanding of most of our viewers here, give us more clarity on what this figure here means for the markets.
So really what we've noticed, especially since August 15th, when the inflation data was released for July 2024, 2024, we've seen the fixed income market rally significantly. I mean, we've seen yields, we've seen investors just trying to take positions and take advantage of the previously high yield environment in order to, enjoy the fixed returns that comes with it. And that's what really played out in yesterday's auction. And what we noticed was that despite the offer being 161 billion, as you rightly mentioned, and the subscription levels printing higher than it, representing a bid to offer ratio of around 3.5 times, we did see that they exited the market with exactly what they offered. And what we are seeing now trickling in the secondary market is investors just cherry picking instruments, especially around that, the ones that were auctioned, just trying to bid at rates such as 17 to 18% for the 1 year. So that's what we're seeing currently in the market. However, liquidity is still a bit tight, and we expect it to be tight through the rest of this week until next week, when we'll see some level of improvement in terms of liquidity that could potentially spur activities in the fixed income market. And as I earlier mentioned, where with the inflation print that came out, there was this expectation that you better lock in your investments now in fixed income space before the monetary policy authorities try to take another stance in terms of addressing inflation. But we all know what has happened to pump price, that's the PMS, which can possibly have an attendant impact on inflation and can be another reason for consideration for leaving yields elevated, generally speaking, in the fixed income market.
Okay, all right, so now let's move, let's take a little bit of a side switch and go to GTCO. That's one of the biggest banks in Nigeria, one of the leading financial markets. Take a look at these numbers here. So now, it has been the first to report this pre-tax profits of 1 trillion naira. And of course, you've called these numbers very, very impressive. So now, Nabila, can you tell us more about this? I know that the company has declared an interim dividend of 1 naira per share against what was declared last year at about 50 kobo. So now, give us more details about this impressive numbers by GTCO.
So really, as you rightly mentioned, the numbers are impressive, and we did see them break grounds in terms of the profit before tax that they recorded, which is around 1 trillion. In fact, it surpassed market consensus, because market was expecting, the consensus in the market was that they would post that level of PBT by full year, but for them to have delivered that in H1 24 is quite remarkable, and it's largely as a result of three key factors. We have the first one, which is as a result of the high interest rate environment that translated to high net interest income for them. We also have the fact that they were able to book some unrealized effects for fair value gains on financial instruments and forward transactions, totaling as high as 623 billion. And there was a third element which was as a result of a drop, a 71% year-on-year drop in impairment charges that also bolstered the PBT performance that we saw them post in H1 24. And just speaking to, on the back of the results, we did hear that they proposed an interim dividend of 1 naira. As rightly mentioned, it is double what they paid last year, which is 50 kobo. But when we look at it in terms of some other metrics, that's number one, the payout ratio is of 3.1%, and it's lower than the 5.0% that we saw in terms of dividend payout based on H1 23 numbers last year. It also implies a dividend yield of 2.2%. That is higher than what it was last year, which is 1.3%. And we also note that these three, the fact that DPS is higher, the second is that the dividend yield is also higher, but then the payout is lower relative to H1 23. We expect some positive reaction to the results, given that last year, between the date of announcement of the interim dividend and the payment date, the share price gained as high as 16%, and just within that short period of time. So we'd expect to see a similar reaction as the stock continues to trade going forward.
Just in 20 seconds, what is your expectation for both the fixed income market as well as the equities market for the close of Thursday's trading session?
So if you're asking for the rest of the week, it's the sentiment in the equities market has been largely bearish, but we are seeing some interest, especially today. We've seen that there has been some interest in Nestle. We've seen that there has been some interest as well in First Bank. Both stocks are up intraday, and even GT is also has traded as high as 47.50 intraday. So we are seeing that is possibly going to translate to a positive close at the end of today's trading session. For the fixed income market, we still expect to see some rally, but for the rest of this week, which would end tomorrow, there is no liquidity or potential activity that could spur fixed income rally for the rest of this week. However, next week, we're expecting coupon payments that would impact system liquidity and could possibly translate to more cherry pickings in the fixed income space.
Okay, Nabila, so thank you so much. I think we'll leave it there and, of course, keep our expectations for the market, well, particularly on the positive side.
Sorry, I didn't get your question.
No, I say thank you so much for your analysis, and we're optimistic for a positive close for the markets.
Thank you very much. Thank you for having me.
Okay. That was Nabila Mohammed, financial market analyst with market numbers for Nigeria's financial markets. Okay, let's head over to the Middle East, where we see the regional indexes. They closed, well, intraday numbers, they're still in positive terrain. Last time I checked, the numbers were still in the green, except for maybe just some. And we see earnings reports coming in across the Middle Eastern markets. The Dubai, 0.26% in the green. Its younger brother there, Abu Dhabi index, by a negative flat at intraday 000 in the red, but 9,322.60 is the index number. And for the other sides of the Middle Eastern markets, we see Saudi Arabia being in the green, the Tadawul 0.51%, and the Qatari Stock Exchange, that's the biggest gainer there, 1.60% at intraday at 10,412.14. And from the Middle East, let's go over to Asia, where we see Asia Pacific numbers, quite impressive. The leaders there, the number one there was Nikkei, 3.41%. And this is coming all on the back of NVIDIA. NVIDIA is still in the news, has been dominating, particularly when you talk about the AI space as well as the semiconductor space. So we see 36,000, of course, this number has dropped all the way from 40,000 and is still struggling, 36,833.27. But this impressive number for the close of Thursday's trading session, that led the regional gains there, the rally there. For the Kospi, we see all the stocks tied to NVIDIA, the likes of Samsung, the likes of SK Hynix, these are semiconductor makers. They also drove this second biggest gain for the across the Asian markets, 257.85 points. That's for the market. And for the Hong Kong Hang Seng Index, the market is also expecting some, like I mentioned with Ladi a couple of minutes ago, Japan's producer price index, it rose by 2.5%, but it was less than the expected 2.8%. But the investors will also be looking out for some numbers there. But Shanghai was the only laggard there, 0.17% for the close of Thursday. The Nifty 50, which is India's benchmark index, 1.89%. India is set to release its August CPI later today and is expected to show a rise of 3.5% year on year. So the markets will be on the lookout for one of the region's biggest economy. And finally, for the US market there, we see that the stock futures, they are rising ahead of the producer price index report, what you call the PPI. Of course, PPI is one of the key gauges to look out for the country's economy in terms of the producers there. So we see the Dow Jones Industrial Average 0.31%, S&P 500 1.07%. For the futures, as well as the Nasdaq futures, that's the biggest there, 2.17% ahead of the opening bell on Wall Street. So other economic expectations there. We're also expecting the labor data, which is expected to be released any minute from now in the United States. So, Ladi, that's it in a nutshell for all the markets at intraday as well as for the close of Thursday's trading session. Right, some more data to look out for, but we'll definitely get all of that data and we'll share it with all of our audience at this point. Thank you so much, Nate, for the details right there. Let's take a quick break now. When we come back, we're going to head straight to London to find out what's happening with the Bank of England. That's in a moment. Just stay with us.
Welcome back. Well, let's head straight to our London studio now. We have Juliana joining us. Great to have you, Juliana. So we see the Bank of England said it made a number of changes, some new bank capital rules. What are you hearing?
Yeah, good afternoon, Laddie. So there have been tweaks, shall we say, not really changes, although the Bank of England have said that they're going to be fully implementing these capital rules by 2026. And basically what capital rules are amounts that banks must keep in their coffers to ensure that if there was a potential shock similar to what we saw in 2009, that they're able to protect themselves. But most importantly, particularly when it comes to these changes that the bank want to implement, they also, of course, want to ensure that banks can remain profitable. And I think that has been the concern from British institutions over the past few years, particularly in the light of us leaving the European Union and the single market. Some banks felt as if the rules were favouring banks in Europe and in America, making them less competitive. And I think that's why Andrew Bailey, the central bank governor, has been careful not to push the limits too much so that banks can remain profitable. So rather than saying that they need a large amount in their coffers, they've given them options, right? Some of those options will be reducing the amount of loans they give out on houses and other loans that people want, and also giving them the opportunity to raise interest rates. So that is what these capital rule changes have announced. However, as I said, Andrew Bailey has said that they won't be fully implemented until the end of 2026.
Right. And another issue right now, the burner, we see public debt in the UK, that's projected to almost triple by the mid-2070s. Well, I guess that's far off.
Yeah, it's far off, but we know that Britain has incredible foresight, and that's why the government's own Office for Budget Responsibility has put out this warning to the current Labour administration about government debt, which I think at the moment sits at just under 100% of GDP. But according to their forecast, within the next few decades, it could balloon to 270% of GDP, which is quite shocking. You know, we talk about debt in Africa or other places, there is a significant amount of debt here in the UK. And there's a reason why it could balloon. A lot of that's down to an aging population, climate change, the consumer habit changes. And is Britain going to be competitive enough, prepared enough to keep up with the changes? That is a massive issue. And I think this is all leading to the Chancellor of the Exchequer, Rachel Reeves's first budget, which we know is coming imminently, I think probably in the first or second week of October. And there are going to be significant cuts. Now, I discussed this with you, I think it was yesterday, Laddie, about the fact that Labour are finding it really difficult at the moment because, as we know, campaigning is completely different to governing. And Sir Keir Starmer's plan was that the UK economy would be fueled by growth, not cuts to private sector, because of course it's the public and private sector that the Labour Party are trying to protect, but they may not have the ability to do so. However, according to the report by the Office for Budget Responsibility, public spending cuts, so this is cuts to welfare, this is cuts to institutions like local libraries, schools, cutting that funding is projected to fuel the debt. And we've heard that from Bretton Woods institutions too. Don't cut public funding, but that appears to be the way the Labour Party will go. And if they don't put a change to that, then this projection of 270% of debt to GDP could be the way that Britain heads.
Right. Most countries are worried about debt at this time. We'll see how they navigate this, but how are the market's looking?
Yeah, the all share is up at intraday. It's up by 0.86%. The FTSE 100, the blue chip, that's up too by 0.84%. The FTSE 250, triple-digit gains there. It's up by 1.01%. In the currencies market, the British pound is trading up against the US dollar too by 0.14%, up against the euro by 0.07%, and up against the Japanese yen by 0.22%, Laddie.
All right, Juliana, thank you so much for the update there from the UK. Thank you. All right, now let's head on to Europe. See, shipping was halted in Germany's Elbe River following a partial collapse of a major bridge in Dresden. Join us with more as DW correspondent Chibona Jabelu. Great to have you, Chip. So tell us, what exactly happened?
Thanks for having me. Well, Laddie, on Wednesday, part of a bridge in the city of Dresden collapsed. No injuries were reported, but there's risk of the whole structure crumbling. So the authorities have shut off traffic on the bridge, and no vessels are allowed below on the Elbe River, which leads all the way to Hamburg, which is Germany's biggest port. Now, in Dresden, the bridge is used to travel between the old town and the new town. And the emergency closure is a major disruption for the city's tram system, and motorists, pedestrians, and cyclists have all been affected. And Dresden's heating system is also damaged. Now, what's interesting is that the section of the bridge that collapsed was scheduled to be renovated next year, and other parts of the bridge reopened in March after months of renovation. So this will probably raise some questions.
Right, could this be part of a wider infrastructure problem?
Well, yeah, the collapse of the Carola Bridge was surprising, but for some, it is yet another sign that Germany's roads, bridges, and railways are outdated and dilapidated. And when it comes to bridges, as many as 5,000 of them along Germany's autobahns are so old that they need to be renovated or rebuilt as quickly as possible. Now, more than half of the Autobahn bridges were built before 1985. The Carola Bridge, in fact, was built during the communist era in what was then the German Democratic Republic in 1967. Now, bridges built before 1985 were basically designed for less traffic and lighter vehicles. And do keep in mind that, for instance, electric vehicles weigh more than combustion engine cars. So even the transition to EVs may require updated bridges. Now, the only problem is that too little has been done in recent years to fix older bridges, and the federal government's financing options are restrained by a national debt brake. So this is the limit on borrowing, which is enshrined in the German constitution. Federal states are banned from borrowing, and the federal government is only allowed a maximum of 0.35% of GDP a year. So this is why the government is struggling to find the money to fix older infrastructure.
All right, what can we see in the European markets today?
Well, European stocks are expected to trade slightly higher today as investors await a much anticipated interest rate cut by the European Central Bank. Markets have already priced in a 0.25% rate cut, which will bring down borrowing rates to 3.5% in the Eurozone. And after that, the focus will shift to the US Fed. The latest consumer price data in the US has pared down hopes of a 0.5% rate cut next week. And in terms of economic data, Spain's inflation figures are due, and later, US initial jobless claims and the latest producer price index will be released.
Thank you so much. So much data to look out for right there in the US. Thank you, Chibona Jabelu. All right, let's get a check on the commodities market. Now, see, cashew nuts, one of Nigeria's most important primary products, according to Q2 2024 foreign trade in goods statistics released by the MBS. We see a contribution of cashew nuts, about 229 billion naira. To agricultural earnings that increased about 24% from 8.3% in the previous quarter. Joining us now for more, Michael Elozobe is an analyst with FDC. Great to have you, Michael. So what is responsible for this increase and what does it mean for the Nigerian economy?
Okay, thank you for having me. The reason as to why we have this increase is as a result of the ban that was taken on by Ivory Coast around March in Q1 of 2024. Ivory Coast had the ban on their exports of cashew nuts because of the local crisis that they were experiencing. They wanted to taper domestic prices of cashew nuts, and as a result, they put a ban on the exports of cashew nuts. So that led to international supplies being diminished, because we need to remember that Ivory Coast is the largest producer of cashew nuts in the world. So as a result of constrained international supplies, as well as dry conditions even in Vietnam, we saw prices of cashew nuts rise by as much as 60% to 1,700 per metric ton. And that is what Nigerian farmers have been able to benefit from.
Right, and I did try to find out how much a bottle of cashew nut was in Nigeria, and it was about over 5,000, 7,000 naira for one bottle. Why is it so expensive here?
The reason as to why it's so expensive is as a result of seasonality. Farmers have reported that they mainly get cashews are normally in season between February and June. As a result of going, out of season, we've seen that prices of these products have increased.
All right, so what can we learn from a country like Ivory Coast? They're the largest producer of cashew nuts globally, averaging 1 million tons, from tiny harvest. What can we learn from them?
Okay, so Ivory Coast started to surpass Nigeria's production of cashew nuts around 2013. And around that same time, there was an increase in investment in modern breeding technologies. Nigeria needs to invest in more modern breeding technologies that will bring varieties to our cashew nuts that will lead to a higher yield per hectare, and as well as better resistance to crop diseases such as the stem girdler that affects cashew nuts. By doing this, we should be able to increase our yield per hectare for cashew nuts, which is currently at about 400 kilograms per hectare. And meanwhile, the world average is around 700 kilograms per hectare. So if you can invest and create finance for more varieties of cashew nuts, then we should be able to have a higher yield and tap into the market for cashew nuts, because there is a market for cashew nuts. Cashew nuts are expected to generate about $10 billion in 2031 from $7 billion in 2022. That's a rise of about 50%.
All right, thank you so much, Michael. But do let me know when the prices come down, because I want to be able to buy another bottle of cashew at some point. Thank you, Michael.
Thank you. Thank you very much.
All right, to other stories now. Ethiopian Airlines announced the commencement of daily flights to Port Sudan. And starting October 15, 2024, this new route represents a key strategic move in Ethiopia's ongoing efforts to boost connectivity throughout Africa, promoting regional economic growth and enhancing trade and tourism. The daily service will offer convenient travel options for passengers journeying between Ethiopia and Sudan, but also linking travelers from Ethiopian Airlines' extensive network to this important Red Sea port city. And Tanzania is making a bold statement in the blue economy sector with a renewed emphasis on opening its doors to business and investment. According to recent announcement, the country is set to enhance its focus on leveraging its maritime resources, aiming to boost economic growth and attract new opportunities in marine industries. This strategic move reflects Tanzania's commitment to capitalizing on its extensive coastline and maritime potential, paving the way for increased investment and development in the blue economy. And we have some breaking data out of the US PPI. We've been talking about that earlier. US PPI, that rose about 0.2% in August. We have the data out there. And that's in line with estimates and forecasts. So I guess nothing to worry about the PPI at this point, because we know the US Federal Reserve will be looking out for all this data. So PPI, and that's in line with forecasts at this time. Let's get a check on the crypto market now. What's the call on the board? It's green again. So we're seeing that rebound continue right then. The crypto market, 2.65% up for Bitcoin. Deep green for Binance coin there. That's the native coin for the cryptocurrency exchange, Binance, and other coins are looking really, really green. Let's look at the sentiments right now. Is this still a fearful market? Looking at the fear greed index, yesterday there was fear in the market. I'm sure some traders are wondering, it did get to extreme fear at some point, but not 31 points. So we're seeing a recovery with the fear greed index. Let's look at some stories, headlines right there in the market. Swift, they've unveiled tokenized assets transfers there. So they announced the new initiative that was yesterday to streamline global transactions and enable its members to use their SWIFT connection for transactions involving both traditional and emerging asset types, such as crypto. Then we see there's a UK bill to recognize cryptocurrency as personal property. So the UK government is introducing, that's Parliament, they're introducing this bill there that would recognize cryptocurrency as a personal asset, and that's going to be for the first time. So we'll see if that's going to scale through. Then we see Vitalik Buterin there. He's the founder of Ethereum, and he's brought up some talk about layer 2 decentralization. So he has some plans to make Ethereum more decentralized. So He's going to be laying out most of those plans for NFTs, carbon credits, and all of that. So keep an eye on that. Let's talk to Gilbert Jopata now, financial market analyst. Hello, Gilbert. Hello, Gilbert. Can you hear me?
Hey, Mr. Ladi.
Yeah, fantastic. Yeah, I can hear you now. So, yeah, so Swift announcing this new initiative to, streamline global transactions so their members can actually use cryptocurrency. How bullish is this?
First of all, I think that Swift is smart enough to understand that the blockchain technology is revolutionizing finance itself and has decided to disrupt itself before it gets phased out by this technology. So them integrating this blockchain means that it can allow its members access digital assets and currencies via its network. The company actually announced this today, and it noted that its users want to rely on its infrastructure for using fiat, and so they decided they are going to integrate our abilities. Now we could use digital assets, which are cryptos. We could also send CBDCs at the same time with the network. This means a lot of things, if for the blockchain industry and cryptocurrency, where the heads of digital assets in Van Eck, Matthew says that this conversation has to do with Ethereum and its layer 1. However, there are different interpretations as well in the industry, because the Chainlink community, the head of community liaison, Zach, says that no, they are talking about Chainlink and possibly Ethereum, Avalanche, and Quorum. Even though there are further conversation around this that says it has nothing to do with regulated asset, just like XRP. But I think that it's quite a smart thing for Swift to interrogate, our ability to send digital asset. There had been a phase 1 test, which has been on for about a year. There have been a phase 1. And the next phase they are diving into right now is how they can integrate CBDCs and other regulated stable currency. So for even though as the community and industry, which is blockchain, there are different interpretation what this means.
Right.
This means that
Gilbert,
now Swift is being more right now between the bridge between the digital assets and the traditional finance right now.
Okay, but Gilbert, I thought with cryptocurrency, the technology is about taking out the middleman. So is Swift not some kind of middleman at this point?
Before now, I was heavily of this ideology that the more cryptocurrency goes mainstream is going to phase out traditional currencies. But I was very, very terribly wrong, because what I've realized is that the traditional finance and the cryptocurrency market will have to have a convergence, because at the end of the day, even though you are holding these digital assets, or currencies, for you to buy and sell, in the real world, you need to convert that to the traditional finance, which is banking. And yet there are certain persons who may not be of this ideology of sovereign man, being in total control of your finance. They want people to manage finance for them. Right. So there is going to be more of a convergence.
Okay.
But the idea of Swift is more of an interoperability. So you could just move from digital assets, fiat, and convert them to CBDCs and all of that.
Right. Yeah. So much to unpack there, but we'll keep tracking that to see how it really plays out, for the crypto industry using Swift. Thank you so much, Gilbert Jopata, lead analyst, Smart Investor Lodge. Thank you.
Yeah, thanks for having me.
Alrighty then, that's the show today. Visit channelcity.com for more updates. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.